Good morning, everyone, and happy Thursday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy Friday Eve. We've almost made it through the week. As usual, this morning we'll be taking a look at exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. Don't forget to follow me over on the TipRanks TikTok as well, under the username TikToks, for some other quick stock updates. Now let's jump right into this morning's exciting stock market news. U.S. stock futures are slightly in the green this morning. Right now, the Dow futures are up 0.08%, S&P 500 futures up 0.09%, and NASDAQ futures up 0.10%. Shares of Bluebird Bio are on the rise after the FDA approved a new gene therapy that will cost $2.8 million per patient. The gene therapy will treat the blood disorder beta thalassemia and is known as Zynteglo. Zynteglo is a one-time therapy and is intended to replace the regular blood transfusions needed by some beta thalassemia patients. The approval was unanimously backed by the FDA, and on Wednesday, Bluebird announced their $2.8 million per patient cost. It said it would reimburse payers up to 80% if patients still need infusions within the first 2 years following treatment. The Bluebird Bio stock is currently rated a hold with an average downside of 11.5%. And shares of Denbury were on the rise following reports that the company may be exploring a sale, though Denbury does decline to comment. Denbury, who emerged from bankruptcy back in 2020, exited the second quarter this year with zero debt and an increase to their share buyback program. The stock is now up 45% over the past month following the news of a potential sale. According to a report, Denbury has been working with an advisor to evaluate strategic options, but the deliberations may not necessarily lead to a sale. Denbury said that as a matter of policy, they do not comment on speculation. The stock is currently rated a moderate buy with an average upside of nearly 12%. Now moving over to notable earnings reports. In the after hours last night, we heard from TJX, who's the parent company of retail stores like TJ Maxx, HomeSense, and Winners. They came out with earnings ahead of analyst expectations. Earnings came in at 69 cents per share, higher than the 67 cents estimated. Sales of $11.8 billion were lower than the estimated $12.04 billion. Their CEO stated that sales came in lighter than they expected, as they believe historically high inflation impacted consumer discretionary spending. Looking forward, though, they did increase their outlook for pre-tax profit margin slightly. Analysts currently rate the TJX stock a moderate buy with an average upside of 9.5%. With an ease in supply chain constraints, Cisco reported solid earnings and a solid future outlook for revenue as well. Both earnings and revenue beat expectations, with earnings per share coming in at 83 cents ahead of the 82 cents estimated, and revenue at $13.1 billion, exceeding the $12.73 billion expected. Their future guidance was solid, with revenue growth forecasted between 2 and 4% year over year. Analysts have been projecting a decline of 0.6%. The stock is currently rated a moderate buy with an average upside of 15%. And jumping over 20% in the after-hour market was Wolfspeed after releasing solid revenue forecast. In Wolfspeed's fourth quarter, their loss per share narrowed to 50 cents from $1.26 a year earlier. Revenue also rose to $228.5 million. For their next quarter, they're now expecting revenue of $232.5 to $247.5 million, which was higher than the Wall Street's forecasts. Analysts currently rate their stock a moderate buy with an average upside of 22%. Now, moving to the pre-market this morning, we heard from retailer Kohls. Their stock is falling after they cut their future guidance. Despite beating analysts' expectations for profit and revenue, investors were looking to the future forecast, where they had to slash their outlook, saying that middle-income customers have been particularly pressured by higher inflation, putting a damper on sales. They're now seeing their net sales in fiscal 2022 declining 5 to 6%. In this quarter, they reported earnings per share of $1.11 versus the $1.03 expected. The Kohl stock is currently rated a hold with an average downside of 3%. And coming out with better than expected results was BJ's Wholesale Club. They saw revenue grow 22% year over year. They reported earnings of $1.06 per share, ahead of the estimates of 83 cents per share, and had revenue of $5.1 billion, exceeding expectations of $4.6 billion. They've now also increased their fiscal 2023 earnings expectations to $3.50 or $3.60 per share. Analysts rate the BJ stock a moderate buy with an average upside of 9%. The after hours today is fairly quiet for earnings, and tomorrow morning we'll be hearing from John Deere and Foot Locker. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by Wolfspeed following their positive earnings results. Under the ticker WOLF, the stock is up about 21%. They're followed by High Peak Energy under HPK, up over 7%, and Canadian Solar under the ticker CSIQ, up about 6.5%. Our biggest losers this morning are led by XP. Their stock has been on the decline following a disappointing earnings report last week. Trading under the ticker XP, they're down 7.7%. They're followed by Kohls under the ticker KSS, down 7.6%, and 10x Genomics under TXG, down 5.6%. So that is going to be everything for Thursday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always appreciate hearing from you guys. Thank you so much for watching. Have a fantastic day, and I'll see you back here next time.